connecting the world where it matters most. That's the mission of AI native platform Juniper Networks, who is here today to ring the opening bell. Good morning, you're watching NYSE TV Live. I'm Trinity Chavez, and today is Tuesday, August 20th, and we are coming to you from the studio perched up high above the trading floor at the New York Stock Exchange on the corner of Wall and Broad Streets in Lower Manhattan, the epicenter of global financial markets. And in just about a half an hour, Juniper Networks, which trades here at the NYSE under ticker symbol JNPR, will ring the opening bell and open up the U.S. equity markets as it celebrates its 15th listing anniversary since transferring to the exchange in October 2009. But that's not all. It's also celebrating being acquired by another NYSE-listed company, Hewlett Packard Enterprises, for a whopping $14 billion or $40 a share. So today's celebration is a reminder that while the topic of AI has generated significant buzz over the last few years, Juniper has been working in this space for quite some time. Founded in 1996, Juniper has been dedicated to dramatically simplifying network operations and driving superior experiences for end users. Now, the company focuses on AI networking, cloud, and connected security solutions, but it also supports many of the world's top cloud operators and global service providers, and even works with universities, banks, and retailers around the world. As I mentioned, Hewlett Packard Enterprises, ticker HPE, announced in January that it would be acquiring Juniper Networks to accelerate its AI-driven innovation goals. Now, the company said in a statement, the combination of HPE and Juniper advances HPE's portfolio mix, shift toward higher growth solutions, and strengthens its high-margin networking business, accelerating HPE's sustainable, profitable growth strategy. Now, the company also outlined some key strategic benefits Juniper brings to the table. HPE believes that acquiring Juniper will shift its portfolio towards higher growth, higher margin businesses with significant free cash flow, enabling greater investment in AI and cloud solutions. The company also noted that networking will become the core of HPE's hybrid cloud and AI offerings, expanding Juniper's presence in data centers and cloud providers. The acquisition is expected to close later on this year or early next year. Now, HPE and Juniper are just two of the latest companies to make headlines in the very active AI space. And joining me now to talk more about it is John Furrier, co-founder and co-CEO of SiliconANGLE. Good morning, John.
Trinity, great to see you. Thanks for having me here.
It's great. It's great to have you. And you know, we were talking about AI, how it's making headlines. Let's talk about, first of all, what you're doing here, SiliconANGLE, theCUBE, and the event that you're hosting here at the Exchange.
So we're excited to be partnering with you guys on many levels, but here Juniper is celebrating the anniversary, as you pointed out, and they being acquired by HPE changes the game in networking. That's the sector that Juniper's known for, and networking is one of those three things, that's the three building blocks that we all know: compute, storage, and networking. And in AI right now, the hottest thing is the infrastructure, and the networking is where the action is, and Juniper's got this event. They're celebrating with their customers 15 years, but huge announcements. AI native networking is what they're calling it, and this is kind of going to change the game and shift and accelerate more application developers. So Gen AI is hot right now, it's kind of hyped up, but this will accelerate the action.
Let's talk about this acquisition specifically. How do you think that it's going to redefine the overall landscape, right, when it comes to AI and technology, especially when this is when it finally goes through?
Well, I think HPE acquiring Juniper is a big move for HPE. This puts a big portfolio element with networking, but not just networking. They had Aruba Networks, but with Juniper, they had Mist, which is their AI, which has been growing like a weed. This has been a great product for Juniper. It changed the nature of the company, and now HPE has the full package. They have GreenLake, they have the cloud play, and with networking, they can accelerate the technology innovation that's going to enable the wave, this Cambrian explosion of generative AI applications. And you can see it right out there, the developers going crazy. They need networking.
Yeah.
And this is going to fill a big void in the market. It's going to accelerate a lot of change.
Absolutely. Talk to me about some of the headlines that you're covering on your shows.
Well, all the action is in the infrastructure right now. Everyone's kind of waiting for this next layer to kind of flip. It's almost there. NVIDIA stock's on all-time high. You see software is a big part. The biggest story in generative AI is the hardware and software together at the kernel level. I know it's a geeky term, but you're getting down to the kernel level. We heard that with CrowdStrike, the kernel access. So you're starting to see developers go down to the hardware level, and that's where the networking plays. So Juniper and HPE is perfectly positioned to capture this next wave. It's going to be pretty incredible to watch. watch, and certainly it'll change the game on the industry.
Are there any startups that you're specifically excited about in this space when it comes to AI and tech?
Well, I think there's two types of startups. There's the big language models that are getting smaller, faster, cheaper, so you're going to really run these large language models on smaller machines like PCs and devices. But the semiconductor boom right now, we just had the AI native networking event, the AI infrastructure event with you guys in Palo Alto. The leaders are not just the big chip companies, they're startups.
Yeah.
So in the semiconductor area and semiconductor software, I see a lot of action. We're covering a lot of startups in that area.
And you know, it's also at the forefront of conversations around the world, especially here on Wall Street, obviously cybersecurity. You know, we were just at Black Hat where you hosted an amazing event there as well. So let's talk about some of the biggest key takeaways from that convention.
The big takeaways from the cybersecurity market is it's a data problem and a risk management problem. So you look at all the nerdy conversation with technologies. At the end of the day, it's massive scale of data. So you're starting to see new techniques with generative AI accelerating the good guys to fight the bad guys. And the bad guys have AI too. So it's an arms race right now. Who could get that AI technology up faster?
Well, that's what I was going to say. It's a cat and mouse game, right? Because I mean, all Gen AI, cloud solutions, cloud data, you know, everything we have access to, right? But so do the bad actors. So it's like, how do you stay innovative? How do you stay ahead of those conversations and ahead of the curve before the bad guys do?
Well, threat detection is one big one, but now that the generative AI is coming in, the surface area for attacks are expanding. So the tech companies have to look at their platforms to be smarter, faster, and how they identify threats. And then two, how do they close them down? And then how do they make it more complex? I mean, think barbed wire on a fence. You got to make it a little bit harder for the bad guys. They're still going to get in, but ultimately Gen AI will give some great instrumentation. I think we're going to have a full surveillance culture around AI because the security threats are real. And we saw CrowdStrike, we saw what the damage is done, the disruption. I mean, Delta Airlines had thousands and thousands of flights. We in the real world see that and go, what happened? Well, they had kernel level access and they're running Microsoft Windows. So we see that, and that's not only going to get worse. So I think Juniper, the HPE, these kinds of new software techniques, Trinity, is where the world's going. So we're going to see a whole nother generation of companies, brands emerge. That's why I'm focusing on the semis right now and looking at the data piece, because those two areas, the flip will script.
A lot to look out for.
The script will flip.
Well, we have to go to our live coverage in the boardroom now, but thank you so much, John, for joining me. It's always great to have you. Now, as I said, I am going to throw it over to my colleague, Chris Taylor, for more of our live coverage from the boardroom.
Good morning, everyone. I'm Chris Taylor, Global Head of Listings here at the NYSE. On behalf of all of my colleagues, it is my pleasure to welcome Juniper Networks back to the New York Stock Exchange as we ring today's opening bell for a dual celebration. We are celebrating the 15th anniversary of Juniper's listing on the New York Stock Exchange, and of course we're celebrating all of you, the customers and partners of Juniper Networks. So good morning and welcome, everyone. So I'll briefly touch on the history of the exchange. We grew up right alongside this country. When you go outside, take a look around this neighborhood. It's a really historically important neighborhood. There's a statue of George Washington outside. That's where he was sworn in as this country's first president in 1789. The exchange's history goes back to 1792 when the brokers featured in that video signed the button agreement to start the exchange. So 232 years later, here we are. The only reason we can lay claim to that history is because of our listed companies, 2,400 companies from 48 countries around the world. And when Juniper joined as a member of that community back in 2009, they not only joined as a partner for our listings, but they also joined as a technology partner. Since 2009 and through today, Juniper has been an important technology partner of the exchange to make sure that our networking systems are state-of-the-art back in 2009 and today as well. So from all of us at the exchange, thank you to Juniper for the last 15 years. We truly appreciate the partnership that we have. And the only way we know how to celebrate a great company is by ringing the opening bell. So without further ado, I'd like to call up today's bell ringer and the CEO of Juniper Networks, Rami Rahim. Rami.
Wow. So as Chris knows, this is definitely not the first time that I've come here and I've had the honor of pressing that button for the opening bell in the New York Stock Exchange. I've truly valued the partnership over the last 15 years. But I won't lie, this one feels a little bit different. It hits a little different. I've been in this job now for close to 10 years, hard to believe. But it's hard not to feel a little bit of nostalgia when I think about the next chapter for us as a company. Along with that nostalgia is incredible excitement. Excitement about the opportunity, of what we can do together with Hewlett-Packard Enterprises. That being said, when I reflect on the last 10 years, there are many aspects of my job as a CEO of the company. The one that I would say always stands out as the most fun that I always have, again, as a part of my job, would be spending time with our customers and valued partners, and that's all of you. We would not be here today without the support, the incredible support, the trust that you place in us each and every day, in our solutions, in our services. I could not be more proud of the innovation and the execution that Juniper has delivered, but we could not do it without all of you. So that's what today is all about. And I can't think of a better setting and an environment than doing it right here in this beautiful historic setting in the New York Stock Exchange. So with that said, thank you all for joining us. We've got a fun and exciting day ahead. And I think, Chris, you're going to help us with the next steps here.
We're gonna get going soon. Thank you, Rami. Really appreciate it. Thank you so much. So, Rami, stay with me for a second. So, we have a lot of traditions built up over a couple centuries. The most notable one, of course, is what we're going to do in a few minutes when we ring the bell to open today's market. Last I checked, the futures were trending up, so we could celebrate however we are so moved. But we also have another tradition. Rami, we present a medallion to our bell ringer that we strike in this building every single day. The front of this medallion is the facade of the exchange, 6 pillars that symbolize free markets all over the world. On the reverse side is the Buttonwood tree where it all started back in 1792. Awesome. Congratulations on a decade at the helm, Rami. We can't
thank you so much, Chris.
Thank you so much.
Appreciate it.
Appreciate it. Quick photo here.
Thank
awesome.
You.
We have one more thing too, Rami. It's a special thing. We get to do this when companies first list on the exchange, when we present an initial certificate of listing, and we do it on important anniversaries. And this is certainly one. This celebrates 15 years of Juniper Networks, 2009 to 2024 on the New York Stock.
That's awesome. Thank you so much, Chris. Appreciate it. Thank you.
Awesome. Thank you. Thank you very much. I'm going to turn the live stream over to my colleague, Trinity Chavez, who will host us the rest of the morning. We'll see you on the trading floor. Thanks, everyone. All right.
Thank you again. That was Chris Taylor and Juniper Networks CEO Rami Rahim, who joined Juniper just 1 year after its founding in 1997, and he was appointed the CEO in 2014. And we all heard him just talk about how he and his team truly strive to deliver network experiences that transform how people connect, work, and live by changing the inherent complexity in the 5G and cloud era, and how they are very committed to advance real outcomes for network teams and every individual that they serve. And he also talked about how he has the most fun when he's spending time with his team and his customers, and how there was no other better place than to celebrate than this iconic institution, the New York Stock Exchange. Now, switching gears a little bit, I want to bring in Chris Marinac. He is the Director of Research at Janney Montgomery Scott to talk about how AI is impacting financial institutions, but specifically the banking industry. Good morning.
Good morning. Thank you for having me.
It's great to have you, Chris. So, let's talk about this. How is AI transforming risk management and fraud detection when it comes to the banking industry?
Sure. The banks are now automating about 80% of their workflows through either an automated system or certainly machine learning to do a lot of the routine tasks efficiently and frankly much less expensive than it was 5 to 10 years ago. So that's really changing the back office costs for banks. It's also allowing them to be more consistent with their regulators. Yeah. Banks are heavily regulated by the Federal Reserve, the FDIC, the OCC, state regulators. All of them really are working in concert to better understand how banks are running compliance. And I think a great example of this is going to be your Bank Secrecy Act transactions, your anti-money laundering rules that banks have to go through, both for domestic as well as international payments.
Absolutely. And what role do you see AI playing in enhancing customer experience and personalization in banking services?
Sure. I think it's going to allow banks to have better information so that ultimately banks can service their customers and give them better products. A lot of times banks have to prioritize where there are banks who are doing transactions and really having workflow that support additional transactions. It could be a loan, it could be a payment, it facilitates speed for a customer. That's really how the experience is starting to evolve. I think it's still early innings, so banks are going to uncover a lot better ways to operate the tools that they are given from AI, but it is very much evolving quickly. We're seeing a lot of the major banks being the lead in this, and then most of the mid-cap and smaller cap companies are following.
Now, I want to talk about the job market a little bit. How might AI-driven automation impact job roles and workforce dynamics within the banking sector?
So we've seen a pretty steady trend of banks having less full-time equivalents in the industry for many years. I wouldn't necessarily blame that on AI. I would blame that on branch infrastructure coming down. I think banks are finding ways to do more with less, and the branches, the internal automation that's been happening long before AI was a thing, has been underway. This has been going on, frankly, for 15 or 16 years, ever since the last great recession in 2008-9. So today, AI is just simply taking quantum leaps forward to help banks automate. What we see happening is that banks may be cutting staff in one area, but then hiring elsewhere. They're still hiring a lot to do additional compliance work, additional sort of sales work, to try to not only data mine, but also prioritize where they need to be making customer calls. A lot of the banks are having success with tasks that are helping them understand from 1 to 10 which clients should get called first, which clients are doing more or less business with them.
I want to go back to your earlier point about regulation. In what ways could AI influence the future of regulatory compliance and reporting for banks?
Sure. So the Fed and FDIC and OCC all want to have a standardized practice where banks are doing the same thing routinely, consistently over time. They want to monitor those transactions and look for outliers. That's where AI can be incredibly helpful, but it also creates a standardization so that as rules evolve, that the regulators can actually implement them very quickly. And that's where I think that the machine learning can be very useful for banks the next 5 years. We think it's very much an early trend, but we think it will evolve. You know, they are sort of the police, the police force and law enforcement for the industry, that is the Fed and FDIC, OCC. So as they implement these tools, it actually is going to make the industry better and really offer more products to customers, both on deposits as well as loans.
And you know, I do want to talk about cybersecurity and the implementation of AI into business models in banking institutions, financial institutions around the world. So are you changing or prioritizing anything from where you sit when it comes to the cybersecurity sector and the implementation of AI? Obviously, there are deepfakes out there. There are bad actors that are, you know, that could infiltrate financial institutions. Is there anything that you're doing to safeguard against those things?
Well, for me as an analyst, I'm asking a lot of questions to understand what banks are spending, what exactly they are doing in terms of where their efforts are to build out their systems. Obviously, cybersecurity is 24/7, 365. You have to make sure your board is up to speed. That's a critical factor. We're seeing banks stumble because the board is not fully engaged on the cybersecurity method. That is less true than it was 2 years ago, but it still is a factor that we have to ask and verify. I think that the cyber issues are going to help banks be better. Banks are very good at sharing data with each other internally. They don't always share cybersecurity incidents with us in the street on the public standpoint, but we know it's happening behind closed doors. We also talk a lot about what banks do during holidays. As we have a Labor Day holiday here coming up in 10 days, that's a ripe time for these cyber incidents to occur.
And which AI innovations do you believe will have the most significant long-term impact on the banking sector's profitability and efficiency?
So I think overall the compliance work tools for AML, BSA, for certainly CRA, Community Reinvestment Act, are critical factors that every bank does, and that I think can save and also help them be compliant. That really does save legal costs for banks down the road. I also think that this customer automation that allows folks to understand who you're doing the most business with and where you can get that additional loan, the additional deposit, that's where the incremental profits are the greatest. When you have an existing customer, but you're doing your third, fourth, fifth transaction or loan with them, That's where the big money is.
A lot of key takeaways right there. Thank you so much, Chris, for joining us on the show today.
My pleasure.
Now, just last month, Juniper introduced its new campaign, The Now Way to Network. The company says that this is a milestone moment for them as it provides an opportunity for Juniper to share the groundbreaking benefits of its AI native networking platform. Let's hear more about it.
Welcome to the Now Way to Network. They switched to Juniper's AI native network. Now everyone's so productive, they're operating at a higher gear. Now their network is self-configuring, self-detecting, and self-healing. So their IT team deals with up to 90% fewer network trouble tickets.
Whoa, what was that?
Just the sound barrier. That's the Now Way to Network at work, with real AI, putting you in the fast lane.
Every day, it seems, I hear about another customer we helped eliminate network trouble tickets, speed time to deployment, reduce time to resolution, and lower their costs. Aston Martin saw network-related incidents fall 70% after switching to Juniper. Halfords, a UK retailer, entirely eliminated their network trouble tickets in the first 2 months using Juniper. We helped the Miami Heat drive 600% cost savings in its arena. And the Northeast Georgia Health System cut install time for its Wi-Fi deployments in half. I am so grateful for all of our customers and partners who are putting their trust in us to transform their businesses in this era of AI.
Juniper Networks is the backbone of the Aston Martin Aramco Formula One team. Our AI native network is the formula for campus to track support, lower latency, higher capacity, eliminating downtime. Juniper is the formula for performance. Imagine what we could do for you.
In the Gartner 2024 Magic Quadrant for Enterprise Wired and Wireless LAN Infrastructure, Juniper was placed in the highest ability to execute and furthest in completeness of vision in wired and wireless. We were also recognized as a leader in the Wired and Wireless Magic Quadrant for the 4th time in a row, and a leader in the Indoor Location Services for the 3rd time in a row in the Gartner 2024 Magic Quadrant for Indoor Location Services. Juniper also received the highest scores in 5 out of 5 use cases, tying with one other vendor for the branch office and SMB use case in the Gartner 2024 Critical Capability for Enterprise Wired and Wireless Infrastructure report. If you're interested in wired, in wireless, and indoor location solutions that bring agility, automation, and assurance, I encourage you to visit juniper.net to learn more about Juniper Networks and the industry's first AI-native networking platform.
Anand Pradhan, Senior Director of AI Technology for the New York Stock Exchange, is joining me now to talk all things AI. Hi, good morning.
Good morning.
It's great to have you, Anand. So let's talk about how AI is being leveraged to enhance effective decision making.
Cool. ICE and NYSE is a data and technology company. So AI has been in the use for a long period of time, including our ICE chat application and various other aspects of data pipelines. But with the advancement of all the technology related to AI, Gen AI, it is being reimagined for data pipeline, customer experience. We are working hard right now to provide better outcome for customers, better customer experience, advanced analytics, so that they can make better trading decisions at the end of the day.
Are there any specific or most promising technologies that you're eyeing right now that is going to help shape the future of stock exchanges or financial institutions around the world?
Yeah, like data is one of the significant components for better AI outcome or output that comes out of all these models. So, you can start seeing financial trading data being used in the AI models as well as, providing better output. One of the other thing is we have a lot of dashboards that people use, so there will be significant improvement in the natural language-based interactive queries into those data sets, So that's one thing. The other aspect is the classic example we are seeing is the infrastructure improvement. Hardware from network devices that is going into the AI space will have positive side effect for lowering the cost for trading technology also.
But talk to me about how you see AI and machine learning really meeting the demands of market volatility when it comes to complex financial instruments and trading solutions.
Yeah, like any technology improvement is always to reduce the cost and improve the productivity over the period of time, and AI is one of the aspects of that. What we are seeing is better usage of AI for making better trading decisions, giving an endpoint to customers to ask questions, or analysts to ask questions into the, let's say, trading rules to data that we provide, without going through a long cycle of development to create trading dashboards and things like that, will definitely have positive impact into making better trading decisions.
Can you talk to me more about how NYSE is leveraging AI to really analyze vast amounts of data, especially when it comes to, we're the backbone of global financial markets. So talk to me about that.
So traditional machine learning and deep learning has been in the use for finding trading patterns. And with the advanced techniques right now, same kind of pattern analysis is being going on right now to correlate different data patterns and trading behavior. As well as you can think of like news data analytics, as well as social media and correlation to trading pattern. The other technique that we have used, I have spoke widely about it, is providing a chatbot to our complex rule, simplifying the explanation of that, as well as various workflow simplification that we have, or content generation that we use for various endpoints, extracting data out of unstructured data, creating structured data product out of that. All those techniques are in the works right now. One other thing is that we are a highly regulated industry, so we make sure we have all the necessary guardrails and testing and redundancy models in place. So we are working hard to make sure we are staying ahead of all the regulation that is coming out, making sure all the policies and procedures are in place so that we innovate, but we innovate with our boundaries to make sure that we provide a better and consistent outcome to our customers.
And I just want to point out, we just got images of the executive team along with Chris Taylor going to the Bell podium to sign the Distinguished Guest Book as they make their way up to that Bell podium to open up the U.S. equity markets. Right now, we're about 2 minutes exactly out. So I want to ask you, though, how the implementation of AI rapidly expanding in technology, how you see this in the broader workforce landscape when it comes to jobs. If do you see displacement from where you sit? What are your thoughts?
So, look, over the years, like I said, with any kind of innovation and improvement, there will be some changes. I cannot predict the future, but I can see that significant improvement going into the optimizations or workflow simplification and things like that. There will be some reorientation that I can see. People who are keeping ahead of the AI-related changes, definitely will have a significant, they will have a significant improvement in the future. So, like I said, we will have reduced time to market for many of the things, and it may generate large volume of data coming out of the models and all the changes that we are working on. That actually opens up a lot more advanced data analytics capabilities, as well as cybersec and infosec is one of the spaces where I can see a lot more work going in data scientists and data related improvements and new job creations. Yeah.
And so we have about 60 seconds to the bell. Just really briefly, what would you say should be at the forefront of CEOs' minds when it comes to AI and tech and implementing this into their business model?
So creating a platform for rapid
And we have about 20 seconds.
So creating a platform for rapid prototyping, making sure that the testing and experimentation is cost effective with new models coming in, so that should be in CEO's mind.
Yes, and we're going to talk more about this a little bit later, but the bell waits for no one, Anand. So thank you so much for joining me. We're going to tune into the opening bell and we'll meet you right back here. you have it. The market is officially open, and what better way to kick this off than JD Durkin joining me now. He is the host for Public.com.
There's no better way to kick it off than with me. No, thank you for having me.
I always love it having you on the show. I mean, but you didn't let me finish your title. So he is also a CBS News contributor, and he's joining me now. I mean, let's get a glimpse at the market. What's it doing?
A little flat to the downside today. Not a big, maybe not a big surprise there. But what's amazing to me, Trinity, is today marks 5 weeks since the stock market reached an all-time high. And you just think about this recession fear-fueled sell-off we had a couple Mondays ago, and the all-time high back on Tuesday, July 16th for the S&P 500.
Well, I was going to say, the 8th.
69,
yes.
And here we are really just 60 points or so off of that. So for all the fear, all the hair on fire that we had a couple weeks ago, we saw investors take profits back in that historic one-day sell-off, more or less, the Japanese carry trade, et cetera. But we've really seen a nice resurgence and a nice rotation back to a lot of those big names who have been performing now with a really impressive streak, the longest running streak so far of the year for the S&P and the NASDAQ.
And what would you think was the major driving factor behind this eighth-day winning streak? Try saying that 10 times fast.
Not easily. I'm glad you had to say it so I didn't have to be the one to say it with a microphone. I think last week we kind of took it data point by data point, right? We got really good news out of Walmart in terms of a beat on top and bottom line, extending their revenue forecast for the year in a really positive way. Also, initial jobless claims. We get this data point every Thursday, Trinity, and as you know, we kind of talk about it. We give it some attention, but after that sell-off, I think there was such desperation, such interest to try and have any positive data point, and that was reinforced there by a better than expected retail sales figure. So you took one data point that was good, followed to another, and suddenly that whole narrative shifted really over the course of just the last few days. And I think that speaks to this incredible resilience that we've seen in that bounce back off of that August 5th sell-off.
And I just want to point out that we're getting images right now of the executive team making their way down to the Bell podium to the trading floor, and they're signing our secret wall over there by the staircase. You remember that wall,
Secret
JD?
wall is awesome.
We have a few secrets
I love
around this
showing
exchange.
guests the wall. I think they think it's like the absolute coolest thing. Well, there's a lot of cool things.
I still think it's the coolest thing. I need to sign the wall one day.
I need to, but the thing is, when you walk down the wall, you don't always know where the celebrities have signed. Like I'm looking for like The Rock or Rob Gronkowski or people like that. I got to figure out exactly where they are. But it's an awesome feature we have.
So many people sign this wall that we actually have to replace those different, I guess, parts of the wall in different areas of the institution. But anyways, back on track to the market. Let's talk about retail numbers, right? So there's a lot of heavy hitters coming out with their numbers. What do you think investors should be preparing for?
We want to see the strength of the consumer. And I think tomorrow we got a handful of great New York Stock Exchange companies in the retail space set to report. We got Macy's, we got Target. We've also got TJX. I don't know about you. I'm a bit of a Maxinista. I admit I love the treasure hunt. I love the off-price bar.
I can't do that. I don't like the treasure hunt.
You don't like the treasure hunt?
No way.
Listen, the treasure hunt is not for everyone. You need to have a real brave stomach to walk in there. You don't know where you're going to get. But I think that kind of speaks to maybe a bit of a shift in the consumer. So, a company like TJX, which of course is TJ Maxx and Marshalls as well, the stock is actually slightly outperforming the broader S&P 500. It's about 20% up or so since the start of the year today. So we want to get a sense on the underlying consumer. Are more consumers going to a place like a TJ Maxx or a Marshalls to do some of that off-brand shopping? That'll kind of speak to, I think, the sentiment and the confidence Americans have as we, of course, enter, believe it or not, the holiday shopping quarter is going to be here before we know it, front and center for a lot of these big names tomorrow.
Oh, trust me, that's at the forefront of my mind. I love a good shopping day, shopping week. I mean, I'll take it all. But I want to go back to those numbers. So we learned last week actually that there was a 1% jump in the retail sector in July. So what do you think is driving this, and what is the overall sentiment when it comes to consumers?
Yeah, I think, like we said earlier, I think you just kind of take it like one data point at a time. And for whatever reason, Americans may feel as if, hey, although I may feel a little bit sour overall about the macro set of economic conditions, maybe I have a little bit of extra discretionary income. I think that's why the central bank is so focused right now on labor data as opposed to the price stability part of its dual mandate. And I think we'll hear that more from Fed Chair Jay Powell when he speaks at Jackson Hole in Wyoming on Friday, right? Really indicate to investors that if we need to, if the central bank really is in a position where it needs to, we will adjust interest rates in light of if there is an unexpected deterioration of labor market conditions. And I think we've seen that in some of the retail spending as well.
And you beat me to it because that was going to be my next point. I wanted to talk to you. Well, two questions here. Why is this such a big event? Why should investors be paying attention to this other than the fact of the interest rates? And, what are you anticipating? I know that, we're anticipating anticipating him to drop the interest rates very soon, but I mean, he's sort of even-keeled whenever he gives these public remarks.
Yeah, he absolutely is. He plays the game. You know, for all the criticism of the central bank, I think you got to say Jay Powell, for the most part, has been incredibly consistent with his rhetoric the last few years. Every opportunity he has to make public comments, he says a variation of the same thing. The historical record strongly argues against prematurely loosening monetary policy, and we will stay the course until the job is done. Trinity, because he's been saying that for the last 2 years, I expect him to say that line at some point on Friday, and then otherwise they call it basically Davos for banking, right? So you're tackling some of the biggest geopolitical and financial and banking stories while they all go off and like ride horsebacks and wear cowboy hats. So that's basically why Jackson Hole is cool, but it does give us this really unique opportunity to hear from the chairman of the central bank in between these FOMC meetings, and I think we know everyone will be closely paying attention. This is really the last time we'll hear from him before that September 18th FOMC meeting, and that is, as you said, the big one we're finally expecting an interest rate cut for. The question is it 50 basis points or something, I think, more realistic, like a quarter basis point cut?
And, you know, speaking of September, obviously an election coming up. So talk to me about, you know, with this election coming up, when are we going to see the politicians sort of, make a decision on the narrative that they're trying to push to make their agenda look more favorable?
Yeah, the election's certainly here. I'm one of the many people who stayed up way too late last night to watch President Biden. He was on stage at 11:30. I don't know how I managed to wake up this morning, but obviously the DNC is full underway. And you'll listen to the kind of competing narratives about the economy between Vice President Harris and former President Donald Trump. You always got to keep in mind, you campaign in poetry, you govern in prose. A lot of the big economic policies that get promised on the campaign trail, they're not realistic, because the truth of the matter is, no matter who wins, you probably need 60 votes in the U.S. Senate to pass the real big sweeping legislation. Neither party is likely going to have that, depending on the November outcome. So you hear a lot of things that get talked about that might kind of rile up the base. Ironically, I think a lot of economists are kind of sour on economic policies that tend to pull very well with Americans, especially in swing states. So I know there's a lot of grumbling and eye rolling from economists over things we've heard from both campaigns, but it's a different situation when it actually comes time to governing, and you're looking over at the Senate and the House and you're saying, I got a tiny margin, we got to compromise. Compromise should not be a dirty word, and I think that's important for investors to keep in mind.
JD, always a pleasure.
Thanks, Trinity.
I'll catch up with you later. Now, AI, deepfakes, chatbots, and cybersecurity are topics that are at the forefront of conversations around the world, especially here on Wall Street. I spoke to one of the industry's leading experts, Howie Xu, CEO of TrustPath, about how businesses stay ahead of the bad actors and what the future of AI looks like. Check it out.
I was the founder CEO of TrustPath, which was acquired by Zscaler 6 years ago. So I've been running AI machine learning for Zscaler first, and then Palo Alto Networks.
Tell me about the biggest trends right now that we're seeing in the cybersecurity sector.
We have the generative AI. We can do, we can make the product a lot more automated. We can label the data. We can come up with the technology to actually identify bad things faster.
According to reports, AI chatbots are going to replace 20 to 30% of customer service agents by 2026. What are your thoughts on this, and how do you see the workforce changing in the near term?
For some use cases, precision is still super important. For instance, if you ask some cybersecurity question, how to configure my VPN or whatnot, you don't want to have an answer that might be hallucinating, right? So for those things, you don't really want to route to the bots to answer. But for some of the questions, you want to route to the bots. So I think 20-30% is roughly the right range for the foreseeable future, that I think the technology, with the current technology, we have the confidence to say, yeah, we can take care of that. We don't have to worry about the hallucination.
According to a report by Microsoft, another NYSE-listed company, Microsoft's fourth work trend index, about 75% of knowledge workers, these are people who work at their desk, well, they're turning to AI to work more efficiently, more effectively. How do you see this changing the workforce?
If you really wanted to get ahead of the curve, you wanted to leverage the technology as much as you can. So I would say, sure, 75% sounds right, in reality, but my recommendation, my thought is the number should have been 100%.
Talk to me about where you see the cybersecurity sector, the implementation of AI, where you see this changing the workforce in the near term.
The product can be smarter, right? The product can identify, hey, this is generative AI bots, identify depending on the policy, I may want to block it. I may want to do something. Maybe I need to look deeper into the data. You can talk to the product. You can actually intuitively use English language to program your VPN, your router, your security products. I don't think that's too far away, at least for a subset of the functions.
Vince Molinari, founder and CEO of FinTech TV, is joining me now in this AI-themed show to talk all things.
I love it. Good morning, and always amazing to be here with you, Trinity. Thank you.
It's always great to have you on the show, Vince. So let's talk about how AI is impacting, the financial industry overall.
Well, I got to tell you, it's almost how it's not impacting and what's coming down the pathway. So when we start to look at everything from fraud, how we look at customer service, but I think the biggest aha moment is how it's going to start to make investment decisions or influence investment decisions for us, finding alpha and capturing delta in new ways that we didn't think were imaginable when we all of a sudden there's this correlation to things that we thought were previously uncorrelated.
But let's talk more about from a media standpoint, right? As the founder and CEO of FinTech TV, you cover obviously financial news on your show. So how do you think the implementation of AI is going to reshape how media is reporting?
I think we're going to continue to move from large language modeling to small language modeling when we start to look at different smaller data sets and pools, and how do you have a little bit more of a push than a pull model to viewers, right? We're going to start to be able to search dynamically in much different ways, much more efficiently around content that they're really interested in, and then the reverse starts to happen where you can push content that is in alignment with their interests.
What are the major stories right now that you're following and covering on FinTech TV that have major global significance?
Well, look, I think it's really this intersection of technology and sustainability, right? We talk about ESG and where that's going to end up politically, but at the end of the day, what is sustainability? How do we put our planet back in a better place and in for-profit models? So when you then to look at that with an overlay of technology, whether that starts to be machine learning, AI, blockchain, I think those are the really big dynamic themes.
Talk to me about how you go about balancing, the reporting of AI and tech, obviously, but also just reporting on finance and financial institutions.
Well, it's a great question because I think, not too long ago they were kind of separate conversations when you're looking at the most disruptive, innovative technologies in public companies. Now you're seeing that convergence where public companies are adopting more and more technologies. We see everything that's happening with the ETPs here at the exchange around BTC, ETH. So those are big moments to say, aha, things are changing. So I think that balance is education awareness and demystifying these subjects.
What should our viewers know about FinTech TV, the major stories that you're covering, and where they can tune in?
Well, right at fintech.tv is probably the best location. Thanks for the shout out right back there at the studio. So we're so blessed to have our studio on the floor of the exchange. So big shout out and thanks to ICE and New York Stock Exchange. But I think it's anything that you want to learn around cryptocurrency, around AI, sustainability, Web3, this very dynamic industries. And then come to our conferences. Climate and capital with NYSE and ICE coming up, right? Learn about the intersection of climate and capital, what we're doing in Abu Dhabi Finance Week, and really where the globe is coming together and being a much smaller place around these subjects.
Yeah, you mentioned one of the projects that we have coming up the pike. So what other projects do you have on your radar? What are you working on that we can expect to see from FinTech?
There's a lot of
this is all off the record.
Yeah, nothing public here at all. Look, it's the global expansion, right? It's the new studios. It's really building that network effect where these conversations are resonating not just here in the United States, but throughout the Middle East, Africa, Asia. When you look at the changes on the continent and engaging next generation youth, right? It's all about technology engagement, and people care about sustainability.
Amazing. Well, thank you so much, Vince. It's always a pleasure having you.
My pleasure, Trinity. Thank you so much.
Now, the New York Stock Exchange has served as a hotbed for the broader AI ecosystem. One company, Poly AI, is looking to use the new technology to change the conversation. Judy Shaw recently spoke with the firm's CEO. Check it out.
Joining me today on NYSE Floor Talk is Nicolas Merchants. He is the CEO and co-founder at Poly AI. Nicolas, wonderful to have you on the show. Thanks for joining me.
Thank you for having me.
So let's start off by talking about Poly AI. Tell me about the company and how the academic background of the founders has influenced its direction.
Poly AI builds the best enterprise voice assistants in the world. You've probably spoken to many of our systems already. I think we're well known for creating things that are indistinguishable from being human. So you'd speak with a voice assistant, but you wouldn't have that nagging suspicion that it's an AI system. Instead, you're just having a natural conversation the way you would with me right now. And we're really trying to change the way that people feel about this technology, and we're doing really well. I started the company as a spin-out from Cambridge, where I met my co-founders while doing a PhD. There's a lot of AI today. Everyone's an AI company, everyone talks about it. It's really hard to cut through the noise and know what's right, where to invest, and how it works. So that whole background and more than a 10-year journey of building things that are this good, it took time and patience, and we had a huge head start. So if we hadn't met at Cambridge a decade ago, we wouldn't be here right now.
Now, Nicolas, call center technology has largely remained unchanged for decades, yet it's one of the areas where AI can make transformational impact. Why has voice been ignored?
Voice has been ignored because it's hard, right? We all speak differently. You just pronounce my name really, really well, right? But we have different accents and things, and it's really hard to build technology that works for everyone, that works well, that can communicate. And because of that, people have mostly flocked into digital channels, tried to make you use chatbots online, on your phone, and really they didn't grapple with the hardest of problems. But people, especially here in America, love talking on the phone. They love picking up and calling a 1-800 number. And that's why we have to deal with that. And you look at the labor shortages now, the demographic pyramid the way it is, people are voting with their feet and moving away from these jobs. They don't want to work in the contact center where today you have like more than 100% churn in many of them per year, right? So they shed their skin once or twice a year because people don't really want to do those jobs at scale. So we're gradually changing that by putting voice assistants that can do most of the work themselves, leaving people to focus on the hard problems, on high-stakes sales situations where you really need that human touch. And honestly, it's just helping them have a much better, more fun job because they're half co-piloting AI and configuring, changing. And then the rest of the job is a lot more fun. So yeah, voice has been ignored because it's hard. But with all the recent advancements, people are willing to give AI another shot. And we're here, we're ready.
And how are you addressing the long-standing challenges and frustrations people have with phone-based support systems?
By making them better, right? People hate automated voice because they hear it and the first thing they scream for is operator, unless they're swearing, which many people do, right? So they usually just try to get out of these conversations as fast as possible and to find a way to speak to a human, right? The only way you're going to win back that trust is you open it up, you're perfectly human, you say, hey, thanks for calling Poly AI, how can I help you, right? And then you might engage, and when you see me reacting, maybe you'll realize that it's automated, but hey, you're having that conversation, you're making progress. The alternative is a 17-minute waiting time. So, if we win back that trust, that's great. If we're not doing well, and we don't always do well, maybe you have a really strong accent, maybe you're asking something very peculiar, then we hand you off really quickly, fast track to a human. And then you build that trust. You're like, okay, you got my back, voice assistant, please, I'll give you another shot, right? And bit by bit, we're changing the way the attitude that people have to them. And when we do that, then you really shouldn't care if you're speaking to a voice assistant or not. Every single company listed here will have a voice assistant in 5 years. And our goal is to be the company doing at least half of all of those automated phone calls.
Now, the buzz that has accompanied developments in the AI space is dominating Wall Street. It's something C3 AI CEO Thomas Siebel discussed on a recent episode of Inside the Ice House podcast. Check it out.
With ChatGPT and enterprise AI is now on the lips of every CEO, every military leader, and every leader in the academy, in the world. And we have all these companies that with their software stacks that'll remain unnamed, where they developed their software stacks in the last century, and now they put AI on top of the box. So every company is an AI company. Well, let me tell you, that's just
You can use the word.
It's poppycock, okay? And it's poppycock. And so we did, in order for those people to be in the AI business, they need to do the thousands of person years of work that we did. They needed to spend the billions of dollars of work that we did to solve these hard problems. You can't simply take a large language model, stuff it in the box with your CRM application or AR application, declare that you're an AI company. I mean, this is like laughable.
Joining me now is Inside the Ice House podcast producer Lance Glynn. Good morning, Lance.
Good morning, Tracy. It's a pleasure to join you.
It's a pleasure to have you. So that was a great little clip that we just heard right now, giving us a little sneak peek as to what our listeners could anticipate from this podcast. But, you know, Siebel is just one of the latest companies to dive into this space of AI and tech. So talk to me more about what the key takeaways were from this podcast and what our listeners could look out for.
I think the key takeaways are just how fast and how important AI integration is into all these companies. You're seeing Thomson Reuters CEO Steve Hasker talk about how they're integrating AI. Our own founder and CEO Jeff Sprecher on our most recent podcast episode talked about ICE's AI Center of Excellence. These companies are integrating AI. They have to. It's sort of the new way of the world, and we're seeing it with all these CEOs we talk to.
And we're at the forefront of a lot of these conversations, whether it's on NYSE TV Live or on your podcast or, you know, on Floor Talk or Taking Stock. And so I really love how we showcase this for a lot of these executives. So, but there's a new episode of Inside the Ice House podcast that's released every week. So what do we have coming down the pike? Come on, you can give us a little preview.
It's very exciting. Every Friday morning, we're releasing what's called the Market Storylines podcast on the Inside the Ice House podcast feed. We're going to be joined every week by NYSE senior market strategist Michael Ranking, and he's just going to talk about the latest trends and developments in the markets of the week and also give a little bit of a preview every week to what's coming the following week. So it's really a great listen, 5 to 7 minutes on your way home, on your way to work. Really would recommend it for everyone.
A lot to look out for. Well, thank you so much, Lance, for joining me. It's always great to have you on the show.
Thanks so much, Trinity. I appreciate it.
Now make sure to listen, review, and subscribe to the Inside the Ice House podcast on your favorite podcast platforms. Join us every Monday for conversations with leaders, entrepreneurs, and visionaries. You can scan the QR code right here to listen to the most recent episodes. Now that just about does it for us on NYSE TV Live. I'm Trinity Chavez, and we'll see you next time.
In life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.